Okay, I recorded this part after the video, so this has nothing to do with, I guess, the video itself. But if you want timestamps of this video in order to get around quicker and to see different subjects in the video, go to the description below. I leave basically notes on the video and where to go for those notes. So without further ado, hope you guys enjoy. What's going on, SJC gang? Today I wanted to talk about the crazy price action that we saw today in SPY and in the overall markets. As you can see from this chart here, we're looking here at the daily chart, and we lost 2.75% today alone, and then we lost a percent and a half yesterday. And those are some pretty serious movements that we have going on here. And I wanted to break down why that may be and where we're going from here. So let's take a look at these charts real quick. I'm going to move over to the 4 hour. So starting since about April 11th, about a week and a half ago, we've seen this pretty consistent broadening wedge here, where price action is slowly beginning to, instead of most wedges where price action converges like that, these wedges are kind of doing the opposite. They're kind of starting small and slowly getting larger like that. And this is essentially a sign that the market is uncertain and that ultimately bears are usually taking control in this kind of movement here. When you see a broadening wedge like this, usually it means the bears are taking control and that you're going to see some downward action pretty soon. So earlier today and even into last week, I was talking about some technical analysis where I thought that, this coming week we were going to see a pretty large dump, either a pretty large dump or we were going to see, some more of this broadening wedge consolidation happening. And it turns out that's what happened. I posted basically this chart the other day, about 2 or 3 days ago, saying that I thought it was going to hit 450 and reject, and that's basically exactly what happened. Now the reason for that, I believe it was yesterday, April 21st, there was a meeting or like an interview press conference with Jerome Powell, and in that meeting he said that next month or in June rather, they're going to be doing a half point rate hike, which I don't know if it shocked the markets per se, but I don't know if it was priced quite in for a half point rate hike. And I think that's what we're seeing right now. I think we're seeing the markets price that in. And, anytime you see a hike in the rates, a lot of the borrowing gets slimmed down, the credit starts to go down, and therefore a lot of these companies and shares and things in the market that are operating off of margin and borrowing, you start to see that go down. And, essentially the last few years, we've seen this pretty crazy bull run. And I think a lot of it has been fueled by a great economy, causing people to be more, you know, risk taking and borrow more money. And now we're seeing the reverse of that, where the economy's not doing so great. We're seeing rates start to rise and borrowing decrease, and that's therefore causing these prices to go down. And I think that's exactly what Jerome Powell and the Fed wants. They want to see these price corrections. At the end of the day, it's exactly what they're looking for. So I think if we move forward a little bit here, that was a big catalyst. Here we have the 20th, starting to see some bearish action. And then on the 21st, we saw a huge jump up, and that was because of Tesla earnings carried the market with it. And I think that helped the market a lot, honestly. It finally hit 450, and that was a huge price for institutions and investors to start putting in their sell orders, and you saw a huge dump on the 21st because of that announcement. And then the 22nd today, we had a few things going on. First of all, you saw a rejection off of 450, which is a key level. You saw this double bottom get a rejection because essentially, I would say that if the price on the 21st hadn't gone below right here, somewhere around right here, then we could have possibly seen a continuation higher. But after it went past this point, I would say it kind of rejected this pattern, and now we're in a new pattern where you kind of have this test of 438, test of 434, and then it's going to retest 434. That's where we ended on the 21st. So on the 22nd, we opened up, and I was expecting one of two things to happen. I don't know why this is all the way down here. I think I had it right here to begin the day at 435.50. And so I expected one of two things to happen. Either it was going to reject off of 435.50, which if we zoom out here is a pretty consistent key level, or it was going to reject off of 435.50 and then re-enter this zone to retest a continuation, and in that case I would have played calls, or it was going to plummet right through 435.50, and um, I'll talk about what I think is going to happen in the future. I think we're going to see even lower prices pretty soon. But it did end up breaking right through 435.50, and that was when I entered puts. So now I'm going to go into the losing trade I had today. I wasn't too happy about this. If we go into the 3-minute here, the market opened up and we saw an immediate dump down. I didn't enter right away, even though I wanted to. My gut told me to. I didn't enter right away because it's always risky on a gap down, and especially after a day like the 21st or a day like yesterday, where we see such a huge um, movement like that. It's kind of risky to go at open and just say, okay, I'm going to enter puts. So I waited a little bit for a correction, and here we saw it drop from 436 to 434 and come back up. And I think on this candle somewhere around here, I entered 8 0-date to expiration contracts for about 0.80. So I entered 8 0 DTE for about 80 each, which equals, I believe that's about $640. That was the trade I took around this price right here. I would say it was about right there. So I entered there and immediately it kept going up past the 9 EMA on the 3-minute, and I believe this is our VWAP. Yep, past the VWAP and the 9 EMA. So I started to get a little bit worried. That's not really what you want to see when you're in puts. Those are both signs that you could be having a reversal. But then it did reject the 9 EMA on the 3-minute and fall back down. Now this is where I started to get worried because it didn't make a new low. Instead of passing 433.80 like I thought it should with all this really bearish momentum, it rejected off of 434, about 434 even, 434.05. And that's really scary because it means that at this point in time, this is what I was seeing. That's what I was seeing right there. And to me, that looks a lot like kind of a double bottom going on, right? I did not like that price action at all, not for being in puts. Now, looking back, there were some context clues. First of all, I didn't follow the trading plan, right? We're at the bottom of a Bollinger Band right now. Ideally, if I had followed the trading plan like I should have, I would have entered here at the 9 EMA. So that was the first problem. If I had entered there, I never would have hit my stop loss. but I didn't follow the trading plan and entered here because I got a little bit ahead of myself and got a little bit greedy, if you will. And so we see this retest, didn't make a new low. I got a little bit worried, and as you can see, it ended up breaking right through the 9 EMA again, the VWAP again, and then I think on the 5 minute, it actually also broke through one of my EMAs. And so I didn't like that, and I exited right there, thinking that this was a double bottom, and that with all that bearish momentum, there was a ton of puts, and you were going to see those shorts start selling, and this was going to skyrocket really quick. So I sold all of my contracts for, I believe it was around a 40% loss. So I lost $256 to start the day and wasn't too happy about it, especially when I saw what happened next, which is it fell right after I sold. It didn't even pass that candle, which is my second mistake. I should have stuck to my gut, and my gut was telling me that my stop should be, instead of it being right above VWAP, it should be somewhere around here. Like, it's gonna try to go up a little bit as long as it doesn't make a new high or look like it's about to make a new high, then I should stay in. But I didn't do that, exited, and it dropped immediately after, but it was too late. I didn't want to chase it, make the same mistake, and go back and forth. So, continue the day, and these contracts ended up being worth, I'm just going to pause it real quick. These contracts ended up being worth, um, I believe the highest they reached was 515 in the day. So 515 times 8. You do the math, and I'll do it for you. Let's see. That's $4,000. So I took a 200 and I don't know, $56 loss, and the day ended up being $4,000, which was perfect because it went exactly according to plan, pretty much. It went better than the plan, actually. My final price target was 428 for the day, and it ended up going all the way down to 425. So anyway, I just thought I would explain what happened there. My mistakes were I didn't follow the trading plan, did not go on puts on the EMA. Instead, I bought at the bottom of the Bollinger Band. Very silly of me. My stop would have been much, much better, much higher than that if I had entered correctly, and I never would have gotten stopped out. And um, just overall, a little disappointing, but hey, it happens. So now, where is SPY going from here? That's the next question. Well, we have one thing that I didn't mention that was released today on the 22nd, and apparently, Russian general kind of slipped up, and there's some plans in some kind of paperwork for Russia to attempt invading Moldova. And I'm going to do a quick little drawing here. This is going to be really bad, but just for reference, so you guys know, um, let's say this is Russia, okay? You have Ukraine. So terrible. Russia, Ukraine, and then let's say all of this is ocean, or the Black Sea, and then here's Moldova. Pretty much. This is really bad, but just for reference, here's Moldova. And so you have a lot of Ukrainians fleeing to Poland and these Western countries, while Russia attacks from the east. And so Russia's thinking, well, if we go around through the sea and the water, we can invade Moldova and then kind of get them from this front as well. That was released today, and I think that might have had some kind of play in the price action we saw today. I'm not quite sure, um, but definitely not good news. That means the U.S. could get more involved, and that kind of, I guess, rattles investors. So we'll see what happens from here. No clue. It could just get scrapped, and the chances that Russia even has the firepower or the economy to support an invasion like that is very low, but it is something to consider. So, where is SPY going from here? Well, if we zoom out to the daily, we got a few things going on. First of all, I'm going to get rid of these rectangles for you guys. In my beautiful drawing of Ukraine and Russia. And let's take a look at SPY here on a very large time frame. So looking at the daily here, actually I'm going to zoom out to the weekly. We got a bit of a potential, possibly head and shoulder situation going on here, right? That's the first thing that I see. Right. Second thing is I expect SPY to retest 420 and then ultimately 410, 411 sometime within the next 2 to 3 weeks. We might see some kind of bounce here, um, in this region around 4, where we're at right now, actually. But to be honest with you, I don't think we will. 427 was the, SPY's last hope in my eyes, and it just blew right through that. It's 426 right now, and in post it's 424. So I don't think that's going to happen. I think we're going to retest the 411, 420 range, and then ultimately I think we might even break past that. Because if we zoom out to the monthly here and pull out our handy dandy MACD, you can see that, wow, look at that. You see this huge green starting from July of 2020. Look at that. Even when it was red, it was green. And you see this huge green MACD starting in 2020, and then some consolidation here. And now look at these monthly candles. What do you see? Oh, oops. All right. You see another broadening wedge kind of deal going on here, where you have one candle and the next candle is a little bigger. It's going up. It's surpassing the high and the low, and the next candle is surpassing the high and the low. And I think that's going to continue. Either that's going to continue happening for a little bit, or we're finally going to see a break, just like we saw earlier. Um, just like we saw earlier here. Look at that break. We're going to see something like that on a grand scale, and SPY might fall into this range, right? Lately, we've been trading in the 400 to 480 range, if you will. 400, we'll just say 400 to 500 range. I think we're going to start trading in the 425 to 370 range. And, hopefully it doesn't fall much further than that, because then again, this is kind of a representation of our economy, if you will, and so you don't want to see it come down to the 100 range or the 250 or 300 range. So hopefully it doesn't drop much lower than that, but yeah, that's where we stand right now on that. And something I haven't done yet, I don't even know if this will do anything, but I wonder what 2 months looks like. Yeah, on the 2 month time frame, we haven't had a really healthy like correction, if you will, since '08. So who knows? Maybe we will end up going down to 350 or 360 or so. But I see it doing something like that. And if we go into the daily here, and if I pull up those rectangles one more time, I think SPY will ultimately end up testing this range a little bit. might bounce off of 415 or so. I think we'll see it come back up to 425 or 427. So something like this. This is getting a little specific now, so the chances of this actually playing out exactly how I say it will are very slim. But something like this, maybe a resurgence back up to 425 or 426. Um, Maybe some consolidation in this area and then a drop down. Something like that is what I'm imagining. And not just that, but SPY has also just ended at the bottom of a channel here. If we zoom out, um, it touched 425.50 and bounced. And if we zoom out, that's a really large channel that we've been making since late March, right? I don't know if you remember, but this was a very easy channel that we were playing for a long time. You know, puts, calls, puts, calls, puts, calls, puts, calls, until here it broke out. I believe that was part of earnings coming up, and then it immediately just fell. And hopefully we hold this channel. If we do, we could see a slow decline, another break, slow decline, but who knows? At that point, it'll be too much speculation. It's hard to get that specific. Um, but hope you guys enjoyed. Check the description for timestamps on this video. Peace out.